the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technician Hour. This is the noon to 1 p.m. Market outlook based on what I look at, based on the Chapman Wave methodology, all of which I'll be teaching a week from Friday in an all-day session. This is an educational thing. It's called the Master Trader Series, but in fact what it is to do with the Chapman Wave techniques. It's to do with trend lines, to do with cup formations, just easy visuals that I love to point out. I'm going to show you a bunch of things as we go through the charts. Let me just do this right now. We've got the Dow. Let me go. This is the E-mini right now. It's down 575 at 2620, considering that the NASDAQ is down 118. Pretty good considering. And the Dow is at 44. So at least let's go through this. Remember, we're talking about patterns. I'd shown that in the E-mini weekly chart, you had an up channel. It broke that up channel, and that was starting a greater angle of ascent. I've been looking at this for 20, 30 years. The way markets start increasing and the baseline starts to rise, to me, is a really important indicator. When you get to the 45% and then you start to go higher to about, or even parabolic, look at this monthly chart. That is parabolic. That is like 87% angle. Then you've got to start considering that when there is a consolidation, does it just take on a flag pattern like a rectangle, stay in a trading band but doesn't go higher for a long time, many bars, or does it make that inverted V-shaped pattern? Let's go through this very slowly because I think the market is now at one of its most vulnerable points, and that's what I was saying to subscribers. There were a number of reasons why. We went to 9 long positions. Whenever we get to 9 or 10, 6 is I'm comfortable with, or 6 positions. It doesn't have to be long or short, but 6 positions in my trader's corner, I'm fine with that. I don't know what it is. I even said to subscribers yesterday, we're at 9 positions. Traditionally, this is where we've got to be really careful because there could be at any point a reversal. Okay, so that's fine. So let me go through what we're looking at here. The E-mini is in leg C in the daily chart somehow, some way. I don't see this as being an alternate count. It looks to me like it's a C. It looks like a Chapman Wave 5. I'm expecting a complex Chapman Wave 5 that has a little coda pattern that says within the last leg down to 4 and the new leg 5, there could be a 1, 2, 3, 4, 5. So we'll keep that in mind. Okay. The weekly chart is really strong, and it's trading at 2621. It hit a high today of 2634.25, so it's down quite a bit from that high. However, this is what I'm looking at here, and the 120-minute chart made a peak F/B with all the indications that if the 9-period moving average was taken out, it would probably be a peak F. We don't have to deal with that now. I do want to move on. I want to get to all of these indexes because we have diversion, plenty of diversion. So here's the Dow, up 53. This is a leg C. Here again, leg C. We remain long. We have 2 positions, small positions. Subscribers still have the 22,290 entrance. That's 1,000 points lower. And newer positions were made at about 23. Oh, I forgot the number because it's 23. We went to the diamonds, and the diamond long was 2. Let me just get this exact. 235.60, so 23,560-ish, and we're at 23,891 right now. So there should somehow or other be a D, and that could be on Friday's decision, Thursday, Friday, or Monday, whenever they come out with the bill. Maybe there's a pop to the upside, and then the NASDAQ and the SMHs, the semiconductors, are telling us, you've already started to have too big a divergence to really start a brand new move to the upside. We'll see. In the meantime, the weekly chart is just snuck above the up channel resistance. It's in leg D, alternate count, changed to a single notation. I'm going to be teaching this in that webinar come Friday week. the notation. Now, the notation is important, but it's not nearly as important as the patterns that we're going to look at. Look at this cup formation. Left side, right side price, time match, broke out of it. And then it says invariably, if you have a Chapman wave cup and ladle formation, this is a powerful move, not a cup and handle. I don't find that powerful until it goes through the whole process of the handle. This is immediately powerful. And it says invariably you do go to at least a D. Then you've got to be careful to come back to the lip, in this case 23,602. So, okay, so that's the down. Parameters to look at, any push to 23,990s. I have to watch that. I said 2,300 I thought would be a resistance point. Boy, we just went right through that like a hot knife through butter. I mean, that's the expression, right? Now I think 24,000 is going to be a very strong resistance. Aha. Now, what is the support? If there is a close under, we're at 23,892. If there is a close under 2380 by Friday at 4 o'clock, that's going to be a big negative, even no matter what the wave count says. All right, let's go to the S&P. A lot to do here. I want to get through it all. I had tons of questions. Hope I can get to them all. So the S&P is in a leg, and this one, I do feel comfortable at this point saying E/C. I think it's still a C. The MACD ran up nicely. Stochastic's very strong at 92%. On balance volumes pulling back a little bit, but it's in the higher level. Let's see how this plays out. G/C in the weekly chart and the monthly chart of the Dow and the S&P are still extremely strong. Now I'm going to go to the QQQ, and this is serious. This is the NASDAQ Power Shares 100 Index Trust Series. Is made. Remember yesterday I said it's making a D/B with a little silent doji on Monday. Tuesday it's got this. I don't want to call it. I'm just going to call it a doji. There are other names for it, but within 4 bars we had 3 dojis. That's usually a sign of some kind of stretching, and we'll see what happens. Meantime, back at the ranch, you've gone down to 153.47 after hitting the all-time high yesterday of 156.69. I need to type that in because now we'll be talking about it again, 156.69. Parameters to watch, any push to the downside, below a close below 152 is very negative. It really changes. The stochastics at 88%, still very good. You need it to go down at least another point and a quarter to make that stochastic break down under 80%. I think even then it'll be at 82%. So that's saying some internal strength remains. Any new high in the next week would be extremely good action, but how we close above the high is going to be important. All right, let's go to the IWM. I hope we got time here. Yes, we do. The IWM is in leg B. Now, this is really unusual. I didn't see any other way to count this but as B. So IWM, Russell 2000, showing good strength here, up 0.38%, Dow's up 0.20%, S&P's down 0.19%, and the QQQ, as I recall, was down 2.1%. So we've got a huge divergence here. We need to go through these very carefully. I had a ton of questions. We'll look at the XLF, we'll look at the semiconductor index, and that's going to be the big tell. As far as I'm concerned, I made a big deal about it over the last couple of days. It did make a peak D. We'll be back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank Bank is a member FDIC and equal housing lender.
Basil Chapman will be hosting a full-day Master Trader class Friday, December 8th from 9 a.m. until 4:30 p.m. This live 7.5-hour online class will teach you the complete concepts of Basil's Chapman Wave trading methodology, along with a variety of indicators and charting patterns that Basil uses on a daily basis, including the concept of higher peaks and lower troughs, the importance of the peak D, buy and sell modes, sustaining rallies and declines, MACD, stochastic, moving averages, on-balance volume, and much more. Everyone that attends will also receive Basil's CD book introducing the Chapman Wave methodology, a $249 value, along with 1 month of his daily trading newsletter, The Opening Call, a $128 value. Basil will be using live charts where and when possible in the webinar to show the concepts of his trading methodology, which works on all time frames. For all the details and to reserve your spot today, visit the front page of TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, let me just check. I've got about 8, 9. I'll try to get to them. I've got about 9 questions right there lined up. 9, 10. All right, so let me do this. A couple of things are going on. I want you to look. Here's the IWM still showing really strong technicals. It broke out in the weekly chart. I don't see any other way to count this but a B in the weekly chart, a B in the daily chart. IWM is leading the pack. And I was saying it was up 0.43%. That is good. Now there are a couple of things that we need to look at. The New York Stock Exchange, NYA.X. The NYA.X, the New York Stock Exchange, is trading up 31 at 12,553. This is a very selective move to the downside. I'm going to show you something incredible. Look, New York Stock Exchange, leg C data. Everything now is in C or the B for the IWM. This is important. That says if the Chapman Wave methodology at all-time highs is to say that daily charts at new all-time highs invariably go to at least a D. They don't break down in a C. I've seen it happen maybe once or twice this year. It's very unusual, but that's the way I'm looking at it. Leg D in the weekly, leg D in the monthly. That's why the Ds are telling me still be careful of what's coming up next. Somewhere in December or maybe January. All right, here we go. Within the context, if you look at the IYT, IYT is the iShares Transportation ETF, trading up. It was a laggard. I said to my subscribers, we've got a couple of positive divergences here. One is that the IYT is rallying. You've got Harley-Davidson suddenly came out of the blue and started to rally nicely. Vallejo, I said, was rallying. So there are certain sectors, certain under the radar areas that happen to be doing well. But look, this is now, let me just double check, 173.96, 174.01, 174. Okay, there it is. So you've got leg C as well, but this is in the IYT. But wait a minute, what's doing it? Well, if you want to learn about the Chapman Wave methodology and the Chapman Wave techniques, of course it's not foolproof. Every technique has some kind of things where you just say, you shake your head and say, wow, that didn't work. But within the context of an umbrella nomenclature, the Chapman Wave, trying to aggregate every single peak and trough, trying to analyze where it is, what it does, and how you can use the crossover of the MACD, how you can use the stochastic going from a buy signal to a buy mode, how you can use the on-balance volume. We went long yesterday, UPS at 114.49. Today's up at 118.46. That's a 4-point gain. And why? Because of the MACD crossing positive, because the stochastic moving higher, because the on-balance volume showed some kind of support. So those are the techniques I'm going to be teaching. I don't like to talk like this because it's just, I like it. My subscribers are my subscribers. We try to keep things kind of private. This is what they pay for. This is what they get. I have no other way to show you how things are working by showing you the action live of what we've done. And look, you had a peak F, serious decline in the weekly chart of UPS. You're in a leg D with a pretty sharp decline under the 9-period moving average. The reason why I want you to go for it on this particular candle, wasn't even this candle, was it on the 28th, today 29th? Yeah, was because that candle looked terrible and then suddenly it closed above the 9-period moving average, the black line. And yesterday, we didn't know what the action would be. I wanted just a slight dip off the high, and we would grab it. It popped up, and then it came down. We got in, and then it spiked higher, and then closed quite nicely with a plus sign, a doji sign. But this is a more positive one because it closed sharply above all the other candles. And therefore, I did anticipate that there could be a nice move to the upside today, regardless of what other areas did. That's UPS, United Parcel Service at 118.47. Day is young. Hey, anything can happen, but this is the only way you can do it, is to go for it. You see, I love that ad. TradeStation has an ad. I use TradeStation. TradeStation has an ad where they got the coaches there. He's got the football players, and he talks about, this isn't a put thing, and it's brilliant. It's just so well done. There's another one where the guy says, he's talking about, he's at a restaurant, and he says, I want the steak a little underdone, shorting, and he talks about it in terms of the market. Brilliant, brilliant ads. Anyway, that's all you can do, is to use those particular terms and try to trade as best you can. So that was UPS. I was asked about XLF. Let's go to the XLF. XLF is up very sharply here. Yes, we missed that entry into Bank of America getting back in. We did have a 10% gain. We just got stopped out, and I never got back in. That's the way it is. You do your best. And it was because there was a peak E, and the yields were rallying very sharply. We'll talk about the yields in a moment. Yes, I'm on trying to answer questions as they come up. XLF, very strong at 48 cents at 27.36. The GS, I was going to get GS. I'm actually happy we got UPS instead, but GS is up. Goldman Sachs is up. It's still kind of lagging, but it is way better than it was just 3 days ago. It's being helped. I was asked about UAL. Let's go there because that's part of the transportation index. Nice move, also in a leg C. Look how many leg Cs we got, except this one is not at all-time highs. It's way off the bottom of the 200-period weekly chart, 200-period moving average. I'm going to be talking about that. I'm going to be talking about this inverted arch formation. It's almost like inverted V that can become a very positive cup formation if certain things happen. There you go. You could turn into this. So, yeah, I'm watching the XLR very closely. So that's the UL up $1.40 at 61.59. Let's go to gold. Next question is, what about gold? Well, gold made a peak F. I'm talking about all these letters in the Chapman wave. It'll be part of the vernacular that you learn, but it's really chart patterns that I want to be looking at, and all these different techniques that I have that I want to teach you about. The MACD, the stochastic. Look, the stochastic on gold never went above 80%. It's at 76%. That's what I've been saying. There's a mystery here. The price has been steadily moving higher, but with the technicals sharply higher, it should have been gold should be at 1335, 1342 right now, not 1287, down 11 points. Something's wrong. Yesterday, I spent a lot of time saying silver is telling us that, silver is down 0.28 and 16.7. Look at that horrible chart. That is terrible. Silver is dragging gold down, and that's going to be important. We are along the dollar, and we talk about this particular. It's not great. It's down 8 cents, but it's off the low that was made in the 91s. It's also struggling, and this is also fascinating to me that you can have such divergences. But we went along right there in the 70-week test of the low of 91s from May 2006. We got on 8th of September. It's had a nice run, but it's a lot left to be desired. Euro dollar currency pair made a peak C. I'm not sure if it can get to the D because it's under the major top in the weekly chart. At a peak G, that was a top that was made at 1.209 back in the week of the 8th of September. That's when the dollar ran up. We'll see, but it's holding very nicely. And the USD JPY, that really is part of the story here. It's a nice candle. Maybe it's leading the Dow like it did off the low on the 8th of September, but it is a good candle. Stochastics turned up. MACD needs a lot of work to be able to garner strength. It's at 111.80, up 0.33. I'm not even going to talk about it until it can get to 112.85, and then I'm going to say good action in the USD JPY. We haven't looked at copper. Yesterday was a sign that things were going down. Today's even more to the downside. The weekly charts are quite ugly. I'm missing crude oil. As we go to the break, we'll get to crude oil. It's down 89 cents. I'll be right back. Basil Chapman, Tiger Conditions out. Dow's up 61. S&P's down 3.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. So, a Monday a week ago, there are those questions. So they're good, and I'm good. I mentioned for my subscriber event that's looking at 2018, what can we expect in 2018. There are a couple of things I mentioned. One of the things I mentioned was that my anticipation, and this was written up in my webinar, the outline, way back 6 weeks ago or so when I was talking to Tommy Jr., we were setting it up. And part of that also said, chances of a third party unfolding in the U.S. is increasing. And that was my contention, that there should be a real strong push towards a third party. Look, 3 years, anything can happen in 3 years. But this is very interesting. I had an email from someone who was aware of that, and it says, subject, millennial poll, strong majority want a third political party. NBC News, and says the strong majority of millennials, 71%, say the Republican Democrat parties do such a poor job of representing the American people that a third major party is needed, according to the results of a new NBC News Gen Forward poll. So I've written a comment. This will go out for my subscribers. I do this with my newsletter, very comprehensive newsletter every single day. I'll be sending it out tomorrow for them. This is part of what I'm looking at. The other thing is that I've been talking about for about 2 years now and saying, watch the governments, watch your city government. With all the building that's going on around here, the promises that developers will make, you won't see half of it. Remember with the big dig here in Boston, there was an incredible plan. I remember saying to my subscribers at the time of my market line, when the big dig was announced, I said, at the moment I saw $3 billion and I saw the name, am I forgetting the name now? It was such a long time ago, from California, that company that does all the big, the huge construction works. The moment I saw the name, I said, $3 billion, watch it multiply by 4 times. Well, it turned out to be way over 12 billion in the end for the big dig here in Boston. It's an incredible thing. It made the commute for me on heavy traffic. It's a little longer, but in no traffic, instead of getting to the airport in 15 minutes, it takes 12 minutes from my house. So big deal. I don't go to the airport that often, but anyway, that's what the turnpike extension. However, what I'd said was city governments are overspending everywhere you look. Institutions are spending everywhere you look. There isn't an institution that isn't doubling in size. It doesn't matter whether it's a small little museum or whether it's Boston College or whatever it is. Boston University has those incredible dorms, etc. Well, I said, watch all the stuff. There was a big thing here in Boston where there was a new skyscraper about to be built, 7 skyscrapers. One of them is across the highway. And one of the things I said, you watch every single issue is going to be a contentious issue with some kind of subordinating to the greater will of the government to appease them so you can get the building done. So there was one that had a certain height, and what they said, they would lower it by, I think, 2 stories or something, so that only by 11:30 the Boston Common, the sunshade would dissipate and you'd get sunshine, whatever it is. So I said, watch the government suite. So here it is, slice of seaport sidewalk selling for nearly $2 million. If anybody knows Boston, you know the harbor, there was just Anthony's Pier 4, it was a restaurant, very famous in its day, and then there was just nothing else. Then, of course, you had the ICA, that's the Institute for Contemporary Art. They doubling in size, coming along, and all of a sudden, this is the place to be. But General Electric moved in right at the top. Right, General Electric. They're building a huge construction there, and this is an area that if ever there's the water level rises, that first floor is just flooded. It's a guarantee. No problem. They're still building that. However, slice of seaport sidewalk selling for nearly $2 million. This is from the Globe Star, November 29th, 2017. Developer Jim Cronin wants to build a $260 million luxury condo tower at 150 Seaport Boulevard. So in the ever more expensive Seaport District, even the sidewalks can come at a steep price. Wait a minute, steep price? A year ago, the developer negotiated to have the sidewalk cost $55,000. Just a tiny piece of sidewalk, a couple of thousand feet or so, square feet. Wait a minute. We forgot that the government needs just a little bit more money. 55, make it 155. Nah, 250. No. 500,000. No. 2 million. They've squeezed them for this little piece of land, and he has no choice. So I've got this thing that I'll give to subscribers tomorrow. I'll send it out. So I said, where is Elizabeth Warren? She's always yelling and screaming about something. She's the person that I said, if it was 15 years ago, in the Clinton period, when they started to loosen the bank regulations, I would have said, you need Elizabeth Warren. But subsequently to that, it's like closing the barn door after everybody's, after everything's left it. So there's Warren. And I said, where's Ed Markey? Markey, there isn't a single issue that if he likes, he's not going to try to legislate. But they've said nothing about this. So I said to the subscribers right here, try, you've got corporate greed, everywhere you look, they're talking about corporate greed. Hey, there is corporate greed. I'm not denying it. But what I am saying, why doesn't anybody talk about government greed? Is that not government greed? And it's just, it's not, you won't see any benefit. That's just going to go into the coffers, or maybe of some politician. And where's Shirley Lang? She's this Boston Globe business section critic, or she's a journalist. I don't know what she is. But she writes about issues, but she's become so political. I used to like what she wrote, although I might disagree with her. I like the way she wrote. I like the way she went in. Now she just does political things. I'm very upset about that. So not a pipsqueak, not a word from Shirley Lang. Why aren't you yelling and screaming about that, Shirley? All right. Hey, I got that off my chest. I like to do that once in a while. All right. So now we're back and we're looking at crude oil. Crude oil's down 94 cents. That top that was made was with MACD rallying, but not as good as it was before. Stochastics gone back under 80% to 79%. I'm really watching this because this is leg E in the weekly chart. I'm really watching it very closely. Why? Because the IYT could benefit. That's the airlines. Oh, look at that. IYT, even stronger now. That means that the XAL, that was a question I had, XAL is in leg, this is only in leg, yep, this is same thing, leg C. But it's coming off a low, and it's just broken to leg C in the weekly chart. Okay, we've got a chunk of stuff to do. Haven't even got started. Let's look at I just want to show you this chart right here. This is the chart of the S&P 10-minute chart. No technicals. Oh yeah, there's two moving averages, but there's no other thing than notation. Went to a peak D, pulls back very sharply. Above 26.26 would be very good. It's at 26.24 right now.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi folks, we're back and we're just looking at natural gas. We're looking at the UNG, which is UNG. Let me just move this. Is the United States Natural Gas Fund. If I can just get this in right now, we'll be all set. New parallel. Make that red. Make it a dashed line so it doesn't overbear anything. There it is. That was easy. So, looking at a plumb line, this is what I'm going to be teaching in this course on Friday week, December the 8th. Look at the plumb line. Natural gas makes a low of 5.86 right there. 5.86 on the 1st of November. Rallies very strongly to the 663 level on the 13th of November. Then fails at a peak A minus. I'm teaching you about that as well, because it goes underneath the 586 level and goes where? To 578. 578? Wait a minute. 578? Don't I remember 578? Yeah. 578 was the low in the monthly chart from 2016. That was, March of 2016. The low is 578. So it makes a beautiful arch formation. Does a test, a successful test so far. Goes to 578 on the, what did I say it was, the 24th? Yep, 24th of November. Rallies sharply. This is one of those patterns that we look at the double bottom of a Chapman wave lowercase h pattern. We're going to be looking at all these patterns in my CD introducing the Chapman wave methodology of importance. And that is the arch formation that looks like a lowercase h, or the arch that comes from the top and curves over. Can you look at the left side? Look at the plumb line. I'm going to teach about the plumb line. I love the mathematical, when it works out mathematically perfect, that's when you've got the greatest chance of success. 586 was the left side, goes under at 578, but it does it in exactly the same number of bars up to the same number of bars down. The stochastic makes a turnaround, the V-shaped bottom of the on-balance volume. The MACD starts to improve. It still hasn't gone positive, but this is so far good action. If there is a move in UNG, which is the United States Natural Gas Fund, above 6.63, no, if there is a close, it has to be a close, above 663, then you're looking at the start of a much better move in natural gas. If there's a breakdown and goes back under 6 in the next few days, it says, oh, not ready yet, but watch that 578 is becoming more and more important. Let's look at the SMHs. That's the semiconductor index. Made that alternate count, which was the G to C at 104.87 on the 16th. It pulls back quite sharply. Then it suddenly gaps up on the 21st to 105.67. That becomes a leg D. And then it made, very unusual, at all-time highs to make 105.83 two tops in 2 days, exactly to the penny, without having the capacity to break out when the MACD was deflecting lower and the stochastic was low. The only reason why this time funny. I've done it so many times. This time, we've done it before and it's been successful for a few hours or a day or two, but then you've gone right back up. This time I said, the market, I've got signals that say we should be going higher. I don't know how that's going to impact the SMHs, but they are absolutely ready. I even said to subscribers yesterday, I have to just give it a day. I mean, I wanted to do it. It would have been a perfect short. Even today, we tried a short. We didn't get the short. I wanted a little higher than the 103 and 104.04. Oh, wait a minute. I wasn't watching that. SMHs. Missed it. Just missed it by a little bit. Yeah, we didn't get the short. And it's got a tremendous, look at the left side, right side. I had drawn this in earlier. Left side, right side, arch formation. This is the conservative one because I took a bar earlier. It should have been a little later, but I said, no, I think it's going to come down a little quicker. Well, it did. But we're going to be watching any rally. We'll see whether we want to short it. I don't think this is a buying opportunity. If you look at all the different semiconductors, wow, look at LRCX, Lam Research. Spoke about it the other day. It had a recycle. It went to an A, B. See, that's just double checking. Yeah, it went to an A, a B, a G. G can't go to an H, so that becomes a D right there, and that became a top. Now this is very interesting because no matter how I count it, so far I think I've still got this as a C in the weekly, but an E in the monthly. Oh man, this is going to be interesting. Applied Materials, AMAT, incredible company, but wow, look at that. A Rogue Wave G, and then it pulls back. It's got almost a 1-to-1 look to the downside. Peak D in the weekly, leg D in the monthly. I tell you something, I think we are real. If it wasn't for this bill that was coming out, everything about the technicals was saying that we should have been pulling back. This is like a coda to the whole thing. And I don't know how it's going to play out, but I think we're real close to at least a digestive session. And as hinted at, it was hinted at yesterday. Now it is definitely in place and says the divergence between the semiconductors, which led the market up, led the market down all year, then failed to make that new high as the market pulled back a little earlier. I think it was the fall, and then went to a new high. That's saying other things are happening here. You've got to be real on your toes. We're going to be watching this very closely. Another question came about the Qs. I've done that on the Qs. I've done that on the SOX. I've done that. Record too high. Just 2 days left. Yeah, I think the market's going to try to hold quite nicely for the candle of December. JP Morgan, we did the financials. I'll look at the JP Morgan right now. Yeah, JP Morgan. That I was saying the other day. Left side, right side price time match. I drew this in. In fact, I drew it in because I wanted to go long. And then I was just debating whether it's a Bank of America or JP Morgan. I was looking more at the yields. This is a breakout. This is another leg C to the upside in the daily chart, leg E in the weekly chart. So yeah, JP Morgan's acting very well. It should go even higher. There's the cup formation with the fulcrum based on the doji candle right there. It's one of the techniques that I use. Next thing, WMT. WMT. See, now this is going to be very interesting. Walmart, it's kind of struggling. Yeah, it's up 76. It made a peak. D, there's another way. I can count it as an alternate count. A, B, C, D, E. Maybe it's an E. But I'm looking at it and I'm saying, Walmart still looks quite strong technically, both in the daily and the weekly, especially in the monthly. So I would not be shorting these stocks at all. Walmart looks good. Let's look at Amazon because that's the one that was a little stretched, started to break out. It's still the absolute, the king of the whole industry. Down sharply today, down 31 at 1,162. Did make a peak E. We'll see. All I can say is that if Amazon over the next 2 weeks before the Christmas season ends, if it breaks under 1,100, I'd say that's really negative action. It's being impacted by the Walmarts and the others who are learning how to use the process of online marketing. And it is a leg E in the weekly chart and leg D in the monthly. So I'm really watching this very closely. If Amazon takes out the high, it doesn't even have to close above it. If it takes out the high of 1213.41 made on the 27th, that'll say don't dismiss Amazon. So would I ever short? I'd have no intention until after the season to be thinking of shorting Amazon, but at 11.61, there are plenty of other stocks. You don't have to spend that kind of money to short. So, we've got one section to go. I think I got to almost all the questions. Let me see. Oh, Bob says Yellen, Dem. Does he mean Democrat? In rearview mirror, 52-week. Oh, what did that say? 52-week high. Oh, Yellen made a 52-week high. Nah. All right, I'll be back. Dow's up 74. S&P is just about unchanged. We'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
That my webinar a week from tomorrow, with the Tiger Dollars, with my CD that you get, or a month of, if you are subscribed, you get a month of my newsletter for free. You get it added to your to subscription. It is from 9 a.m. I'll probably start even a little earlier than that until 4:30. I'll probably go a little later than that. I mean, we're going to be looking at what a perfect time to be doing it. This is an online course. Go to the front page of TFNN. Let me just see what it says right here. So you're going to learn about the concept of higher peaks, lower troughs. I'm going to be teaching you trend lines. I'm teaching you about channel lines, the inside track. When you have a trend line, and I like to draw another within like a 3/16. So I draw another trend line, and when the price goes there, it often just gets repelled. That's like the repellent line or a propellant line. So what you get is you get my newsletter service, the opening call, $128 value, a copy of my CD book, Introducing the Chapman Methodology, $249 value for free. Plus, it's a Master Trader Series. It's $595, but with all the benefits and the 20% discount that you get if you buy Tiger dollars. Think of it as one trade that goes wrong, and I'm trying to teach you how to have the trade go right. I love these, and anyone who's taken them knows that I follow up beforehand. I'll be telling you what you want to get out of it. Let's see if we can go for every one of your criteria. What I want to get out of it. Then during the course, at a certain point, like 3 o'clock in the afternoon, I say, okay, with this amount of time remaining, what haven't you got? What have you got? Let's go through it. And if you still don't get it, I'll follow up with you during the following few weeks. It's a month. You can just ask me whatever you want. So this is coming up a week from Friday. Perfect time if you're going to use, especially if you're going to use your Tiger dollars. I was asked, I don't like to do this. I was asked about it. I will do it. So yeah, we are long AKS. This is AK Steel. A whole bunch of reasons. I don't want to go into the reasons right now, other than to say the MACD and stochastic are good. We bought it at $4.66. Today it did $4.90. It's trading at $4.84 right now. That's 10-11% gain in 3 sessions. And if you want to go back to our stock that we just got today, yesterday, UPS, it's up at 118.52, up $4, more than $4. Hey, folks, check out my opening.
It's that time of year again. The TFNN Salvation Army Tiger Dollar Holiday Sale is back. Through this Sunday only, you can get a 25% bonus on any Tiger Dollar purchase, and up to 10% of whatever you spend will be donated to the Salvation Army in your name. This sale only comes around once a year and is one of the most rewarding promotions we have. Tiger Dollars are a great way to add extra savings to any TFNN product or service. Whether you're considering signing up for any newsletter or workshop in the future, or you're already a subscriber, Tiger Dollars offer an immediate savings on any TFNN newsletter, webinar, workshop, or Master Trader series. And they never expire and are fully transferable to friends and family. For all the details and to take part in this special promotion, visit the front page of TFNN.com before this sale ends Sunday, December 3rd. And happy holidays from TFNN.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.